The Reserve Bank has held rates steady at 8.25%. The move was widely expected. Delivering the decision, Governor Lesetja Kganyago stated that the inflation outlook had improved, and as a result, the bank now expects inflation to return to the midpoint of its 3 to 6% target band in the last quarter of this year. That's after previously forecasting inflation to dip below 4.5% only by the second quarter of 2025. But while the forecast has improved, Kganyago warned that the balance of the risks are to the upside. And so this is why the Monetary Policy Committee decided to stand pat on rates at this meeting.
You've got to look at South Africa relative to its peers. Our inflation outlook says that inflation will decline towards target. If you take the G20 countries at the moment, South Africa has the second highest inflation within the G20. So our policy stance still has some way to go in terms of reining in inflation, and that is why members of the committee felt that the current monetary stance is appropriate to deal with the inflation as forecast, as well as dealing with the attendant risks that we had assessed to be on the upside in respect of inflation.
Finance Minister Enoch Godongwana has used his department's budget vote to warn of the rising deficit that South Africa's fiscus faces and to pledge that the Treasury will work to narrow the deficit significantly in the medium term. Since 2012, public finances have been under strain, with fiscal deficits rising persistently to the point where debt is at more than 5 trillion rand in the current financial year. This attracts high debt service costs, which Godongwana says are estimated to exceed 380 billion rand this year. That then crowds out desperately needed funds that can ensure service delivery. And so it's for this reason that the minister has stated that Treasury will reduce the deficit and stabilize government debt. Transnet secured a loan from the African Development Bank worth 18.5 billion rand. The funds will be used to support the state-owned ports and rail operators' recovery plan. The AFDB says it's also considering giving Transnet 2 additional grants. One of those would be from the bank's Sustainable Energy Fund for Africa. If those grants are approved, they would be used to accelerate railway reforms, address structural and regulatory inefficiencies, and provide support for the rail operators' net zero plans. Anglo American says its copper output was almost flat in the first half. Production of the metal rose just 2% in the 6 months through June. The miner has assured that it is on track to meet full-year guidance for copper, but Anglo has curbed its production target for coking coal. It expects output of between 14 and 15.5 million tons. That's down from an estimate of between 15 and 17 million tons. The revision is as a result of an underground fire at its Grosvenor coal mine in Australia. This comes as Anglo has put its 5 operating coal mines, development projects and joint ventures down under up for sale. That's part of a wider plan to divest less profitable assets and focus on expanding copper output after BHP's failed attempt to take over the company. Taking a closer look at JSE-listed companies within the Anglo stable, Kumba expects to report lower earnings for the first half of its financial year. The miner says headline earnings could be as much as 29% lower. That's as a result of a lower average realized free-on-board export iron ore price and a decrease in sales volumes. This comes alongside a production report from the miner. Total output for the first half fell 2%, while sales were down 5%. Kumba has stated that this is as a result of equipment challenges at Saldanha Bay Port. And Anglo American Platinum expects to report lower earnings in the first half. It's warned of a decrease of between 15 and 25%. That's due to softer metal prices, particularly for palladium and rhodium. Amplats will open its books on the 22nd of July. Alongside the trading update, the company also provided the market with a production report. Total platinum group metals output fell 2% in the second quarter, while sales volumes increased to 14%, thanks to higher refined production and a drawdown of finished goods. Amplats has left its guidance for 2024 unchanged. And Warner Bros. Discovery, the owner of CNN and HBO, have discussed a plan, or has discussed a plan to split its digital streaming and studio businesses from its legacy TV networks as it looks to boost its flailing stock price. Let's take a look at this package report for more.
Warner Bros. Discovery has discussed a plan to split key parts of its business. That's according to Britain's Financial Times. The FT said CEO David Zaslav is examining several strategic options for the CNN and HBO owner. It ranges from selling assets to separating its Warner Bros. Movie studio and Max streaming service into a new company. The aim is to boost the company's struggling stock price, down more than a quarter this year. The FT report said the group is yet to hire an investment bank to initiate any specific transaction, and there was no comment from the company. Warner Bros. Reported a bigger than expected quarterly loss in May. It blamed falling advertising sales at its cable TV unit and the impact of last year's Hollywood strikes on its studios. The group's streaming unit did better, however. It added 2 million subscribers, which helped its adjusted core profit jump almost 3/4.
Top U.S. Federal Reserve officials suggested interest rate cuts are closer due to improved inflation and a balanced labor market, hinting at a possible reduction in September. Let's take a look at the detail in this package report for more.
Top U.S. Federal Reserve officials indicated that interest rate cuts are getting closer. Fed Governor Christopher Waller said the time to cut rates was, quote, drawing closer during a speech at the Kansas City Fed. And New York Fed President John Williams used the same language in an interview with the Wall Street Journal. They cited the improved trajectory of inflation and a labor market now in better balance. The remarks appear to set the stage for a reduction at the central bank's meeting in September. Earlier this week, Fed Chair Jerome Powell and others noted the increased confidence that price gains are continuing to slow and move toward the Fed's 2% target. This is despite a short-lived bump in inflation earlier this year. By the Fed's preferred measure, inflation in May was running at a 2.6% annual rate, down from the 7.1% peak reached during the COVID-19 pandemic. The central bank is widely expected to keep its benchmark rate unchanged at its next meeting, which begins July 30th. Markets have fully priced in a cut in September, with 2 more by the end of the year solidly reflected in interest rate futures pricing.